Welcome to my channel. I'm the cover call guy, and my goal is to create a $120,000 per year passive income using only cover call ETFs. My portfolio currently yields about $70,000 a year and just about $6,000 a month. Legal disclaimer before we start in this video. This content is for informational and educational purposes only and is not financial advice. I am not a licensed financial advisor or tax professional. All opinions are my own and may be incorrect. Trading and investing involve risk, including loss of principal. Please always do your own research and consult a licensed professional before making any financial decisions. Remember, I'm just some random idiot you found online, and I could be completely wrong. Alright, with that out the way, guys, today's video is going to be my deep dive due diligence report on X Funds by Nicholas Wealth. I came across this fund because I was doing a little bit more research on trying to add another weekly, and two, a crypto ETF into my portfolio. So that's how I came across this fund. I hope you guys like my report. Again, fact check me. Leave a comment if you think something's wrong. If you think I should have changed, if I got something wrong, let me know. This the information from Xfund was a bit hard to find, so I did a several cross reference, and hopefully the information is correct. And if you guys own any ETFs from this fund, let me know how it's been performing for you. Let me know if you like it, you're okay with this also, or don't like it, you're gonna sell it. Let me know. I appreciate it, guys. Let's get started. All right, so we always try to read the perspective of every single fund you buy or want to buy, because they straight up tell you their investment objectives, right? They tell you what they plan to do, how to execute, and what their goal and what they're thinking, their thought process is. So the three ETFs that they own is Fiax, and it seeks to provide income. The fund seeks to achieve it by investing in portfolio of U.S. Treasuries and implementing a defined risk options strategy. GIAX is their next ETF, and it seeks to provide income and capital appreciation. The fund seeks to achieve its investment objective by investing in a portfolio of global equity ETF and implementing an option strategy. And then last, Blox. It seeks to provide income. The fund seeks to achieve its investment objective by investing in a portfolio of spot Bitcoin ETF and equity securities of companies operating in the digital asset industry, implementing an options strategy. All right. An investment in these funds involves risk, including possible loss of principal. These are actively managed ETF and are not intended to be a complete investment program. The fund's use of derivatives, which are options, involves risk from different or possibly greater than the risk associated with investing directly in securities. And this is C perspective for full detail of the risk. And obviously I didn't put it because it was too much for the slide. It would have been on and on and on. Guys, you can just Google it, find it on the website, or again, Google it would be the easiest way. Read it, understand it, read it again, understand it some more. A perspective of an ETF always tells you what they're going to do, so you won't be surprised, right? I mean, it's not going to catch you off guard. If you get surprised, then that means you did not do your due diligence enough, and you obviously don't know what you own. And always know what you own. All right, key due diligence findings. All right, so these are, of course, is my opinion on the green flag, red flag, and yellow flag. My green flag for this is the operational. They use an ETF series trust, which is a smart move, at least for me, for my preference. Why? Because this means they outsource all the plumbing, the hard labor, custody, and compliance to specialists, separating their idea from the operational risk. A red flag is the strategy. They are not standard cover calls. I traditionally like a traditional standard cover call. Why? You are seeking traditional cover call returns. You will be disappointed. The use of call spreads create a hard cap on all upside for the most part. Red flag, the motto, the Nicholas brand signals key person and black box risk, which I'll talk about it in later slides. This just means that you are 100% reliant on the skill of a small team and their secret model. If they leave or the model failed, the strategy breaks. And I don't like how Nicholas is the brand, because that means, think about it, like when you think of Elon, you think of like Tesla or SpaceX, right? What happens to Elon if he disappears, quits, or something happens to him health wise, or he passes away? Pretty much the company kind of tanks and you're kind of screwed, right? It's up in the air. It doesn't mean that they're gonna fail, but it's really, really up in the air at that point, right? And then on a yellow flag, which is the conflict of interest. This firm is a 1 billion plus RIA. Why is this bad? They, as an advisor, can use their clients' money to buy their own ETF, which charge fees. This is a double dip. Is a classic conflict you need to be aware of. I don't like that. That was kind of iffy to me, a little suspect. What is an RIA? It's just a registered investment advisor, or a firm that provides financial advice for a fee. So you can see how that's a conflict of interest, right? Of course, they're gonna tell you're gonna pay me to tell you to buy my stuff, right? I mean, that is just, it's to me it's very schemy in a way. If you ever saw the meme of OpenAI investing 100 billion in Nvidia invests 100 billion, gives that 100 billion to AMD gives that 100 billion to Microsoft gives the 100 billion to Apple gives the 100 billion to Google gives the 100 billion to Meta gives the 100 billion back to OpenAI. So if you ever seen that meme, that's how I feel about it. So that was kind of iffy to me. All right, the issuer, Nicholas Wealth, right? Founded in 2017, has 1 billion plus in asset under management. So far, so good. I like that. Rapid growth and pivot, achieving 1 billion plus in asset under management since 2017 suggests their primary complacency is marketing and client acquisition. This prowess is now being pivoted to the ETF market, and they can use their existing 1 billion plus as a captive asset base to seed new funds. So maybe that's the reason why they were growing so fast, right? So I'm kind of connecting the dots here. So we'll see if that's good or bad. The RIA to issuer conflict, like I mentioned before, right? The good advisor, right? Quote unquote, the good advisor. Think of a money advisor and RIA. You pay this advisor a fee, and their only job is to find the absolute best, cheapest investment for you from anywhere. Well, here's the conflict. Now imagine that same advisor also starts his own fund in ETF. He now has a conflict, right? Is he recommending his own fund to you because it's truly the best, or because he makes a second fee when you buy it, right? It's kind of, Nicholas owns both the management and the ETF, and they're like, hey, buy this and pour money to this, all while collecting a fee from you, the investor, right? So it's kind of like, well, why stop that? That's easily kind of taking money out of your pocket kind of way, right? Kind of like the Wolf of Wall Street type of scheme to me. Is how I'm seeing it. I'm not saying it is. All right, don't leave me a comment saying I'm saying it is. That's how I'm seeing it. That's how so far I'm understanding it. All right, X Fund product suite, right? FIAX is a Nicholas fixed income, short-term treasuries, and they pretty much, the options strategy is just spreads on treasuries. Not much to explain there. And then the second ETF, GIAX, is Nicholas Global Equity Income Fund, basket of global equity ETF, and it does ETF call spreads. And then Blox, right? This is the one that was on my watch list. Again, I believe it pays week. I have to double check. Let me double check. I believe it pays weekly. Yes, it does. I just had a brain fart. It does pay weekly, and it is in crypto. So what I like about this so far is that, one, I was looking for weekly, and this is a weekly, and two, I'm looking for more crypto exposure, preferably just Bitcoin, but this one had also ETH, which is I think the second or third biggest crypto. And I was like, you know what, it's not bad. I am a Bitcoin maxi. I love Bitcoin. If I got into I do crypto, and I only really do Bitcoin. I think it's the truest crypto. I don't like how ETH still has a guy behind it, right? That autistic guy. I'm not saying in a rude way. I'm just saying he, I just don't. Okay, I digress. Anyways, Blox pays weekly, and it has crypto. So it's on my watch list, right? I want to give it at least 6 more months to see how it does in a little bit more prolonged downturn, and I want to see how it recovers from the downturn. I'm a pretty patient guy, so if it dips low enough to my price point that I like, I'll probably put anywhere from $1,000 to $10,000 into it. I'll see. It just has to hit the price point I like. I have it on my watch list. I'm just gonna keep my eyes on it, and it might be my third and final weekly ETF. So I got my eyes on it. All right, the engine behind this ETF, right? Call versus spread, right? So a standard cover call, which this ETF fund is not, right? This is simple, two-part strategy. You probably know: one, buy 100 shares; two, sell the call option. Profit: you collect 100% premium from that one call. Upside: you keep all the gains up to the strike price. Downside: it's uncapped full stock risk. And then two, X Fund uses call spread, right? This is a little bit more complex three-part strategy. You are buying, right? One, you buy 100 shares. Two, you sell one call. And three, you buy one call or put at a higher price. You then collect a smaller net premium, right? Premium sold minus premium bought. Your upside is hard capped. You sold all the big gains, and the downside is still uncapped, full stock risk. All right, and then we do a deep dive into FIAX. It's the fixed income alternative. The strategy and objective is consistently monthly yield and a defined risk. Holdings a basket of short U.S. Treasuries as collateral. The engine behind this is that implements a vertical spread option strategy on U.S. Treasuries, Treasury futures, or ETFs to generate premiums. The inception date was 2022, so we have a little bit of data to it. FIAX, the high yield fallacy, right? What I don't like about this is that you need to understand that what drives a high yield bonds risk is the credit risk and the duration, right? What the company fail? Probably not. Don't know. Duration, sensitivity to interest rates. So that's one of the biggest one, right? So Feds are obviously going to be cutting rates. So this will affect this ETF, right? In the 2008 style credit crisis, how you bonds get crushed, right? So Fed are going to be cutting rates. So you will see how this affects it. And I'm not looking at this one, and as is not going to be for me, right? So the FIAX risk portfolio, FIAX risk is driven completely different by factors you are taking on. One is the duration risk from its own U.S. Treasury holdings, and two, options model risk is the proprietary model timed correctly. In a 2022 style raising rate crisis, both high yield bonds and FIX fall. FIX defines risk on its option, does not protect your investment from a fall in bond prices. So it's very interest driven also. I guess it's kind of shielded from the market, but there's a lot of interest involved here. The Fed. FIAX tax and distribution warning. It's highly tax inefficient. The yield you get is a mix of treasury interest and short-term options premiums. Both are taxed at your highest ordinary income rate. Ew, disgusting. All right, the return on capital red flag. Their consistent yield often forces them to use ROC. Per the fund's own 19A notice, which is not accurate, but we have to go based on that, right? What they distributed recently was 59 to 100% ROC. This is a definitive red flag for you. It is not earned yield. It is a self-liquidating return of your own money, which erodes the fund's NAV. And on to their next, right? Deep dive into GIX, global equity. Let's look at the strategy and objective. Objective: global equity diversification and monthly income. Their holdings of funds holding a basket of other global equity ETFs, right? U.S. international equity market. The engine behind this ETF: write a call spread on underlying index or ETFs to generate a premium. Inception date was last year of 2024. GIAX, the core holding fallacy, right? A lot of people use this for a core holding. I don't really think it's a core holding, right? You need to know GIX is not a core holding. You buy a core holding to capture long-term market growth. GIAX strategy guarantees you will not capture the market's upside, right? A core holding is like planting an oak tree to grow in 30 years. The analogy here is, this is my analogy. This is how I understood it. I could be wrong. Let me know in the comments if you think I am wrong. I feel like this is more of a high yield savings account on steroids. It's built to give you a small steady drip, but it cannot grow into a tree that can blow up if steroids, which is the options model, fail, right? So I don't think it's gonna do well in terms of you trying to build wealth with this. It's more of a it's more of just like a better market funds in a way. That's how I see it. I could be wrong, but the way I see it, it's just a little bit more better than market fund account. I mean, if you don't want it in a market fund account, you put it here and hope it grows steadily, just a little bit above average. Not for me. Might be for you. Don't know. All right, GIX, the fee on fee drag, which is also why I don't like it. I feel like this is a little bit kind of schemy. Layer 1, the net expense ratio is 0.93. You pay this fee to Nicholas Well for managing GIX. And then the layer 2, acquired fund fees, right? 0.07%. GIX then buys other ETFs which have their own expense ratio. This means you're paying twice. And this is an unavoidable drag on your returns. No thanks. Not for me. Maybe for you? Don't know. Let me know. All right, then we do deep dive on Blox, right? The crypto income line. This is what I'm here for. The strategy and objective. The objective is to generate yield from crypto's volatility. Holdings, a hybrid of spot crypto ETFs, IBIT, FBTC, CryptoLinks equities, coin, Mara, mining stocks. The engine behind this ETF, right? Call spreads on these positions to generate premium. Inception date, this is very, very new, about 5 months old. June 16, 2025. I want to just add a key detail here that the portfolio manager actively decides the ratio. The impair mix means you are betting on the portfolio manager's skill to guess the right mix, as in how much they want to own for like Bitcoin, ETH, and other. It also holds I think I forgot here. I think it holds treasury bills in this too. So it's kind of like a mix of everything, which is not bad. I mean, I kind of like it in a way just because it has a lot of diversification. But again, it's on my watch list because it makes me feel a little iffy right now. I want to buy it at a better entry price. I don't like the price of it right now. Right now it's very close to its inception price. I think it came out at like $20 or like 19 something. $19 or $20. And right now, as of November 12th, it's about 21.65. I'll probably dip my toes in it around if it drops to maybe 20.50. I like to get as close to the entry point just because Blox is a little new and I like to give it some time. That's just me. If you guys want to own it and just dollar cost average, that is also another great strategy. Nothing wrong with that. Blox, the brilliant structure but flawed strategy in my opinion. What I find brilliant about it is the operational part. By holding spot ETF like IBIT, FBTC instead of direct crypto, Blox avoid the risk of getting hacked or losing keys, right? Always that chance. They intelligently outsource this risk to institutional giants like BlackRock and Fidelity. This is a sound, complex structure for you to get exposure. The flawed part is the strategy part, I guess. The only reason you invest in crypto is for the huge asymmetric upside. Yes. Block strategy is to systematically sell your chance at those huge gain. Yes, it is I guess a cover call in a way, right? You are trading the entire point of owning crypto for a high-risk, tax-inefficient yield. Again, yes, I always say tax-inefficient because we won't know until the end of the year. This fund guarantees you will underperform in the bull market and still get crushed in a bear market. So, I have to think about this, right? Just like any other covered call ETF, I want to be able to capture some upside and be able to capture some downside. So this might be where I'm waiting for a good entry point is what I said before. The reason for that strategy is they don't always use cover call, right? They sell puts. So I want to be able to make sure that the fund actually execute the strategy well. I'll be looking back at it again, maybe December, January, to see how they perform, how the market is. I'm a patient guy, so we'll see. If you guys own it, let me know how it's been treating you, because I'm very interested in Blox, just because I want to get another weekly and crypto, so it fits my 2 criteria. All right, who is flying the plane, right? Operations explained. The pilot is Nicholas Welf, from what I found. He is the only ideas guy. He only decides where the plane should go. The black box investment strategy, right? The airline ETF series trust. This is the big company that owns the plane, flies the flight plan compliance, and handles all the rules. And then the crew is U.S. banks, right? This is the actual crew that holds your money, custodian, and service the engine, which the administrator. This is safe and good. All right. Fact check liquidity and NAV, right? Fact check from what I found from the website in Google is that liquidity is pretty low. That is not good. That is not good. As of November 2025, Fax trades only at 5 to 7,000 shares per day. This bid ask is often 0.05 to 0.10. A 0.10 spread is often on a $20 ETF is a 0.50% hidden cost you pay just to get in or out. This is a massive real cost. So Fiax is out. I think it applies to Giax also. Blox, I believe it has good liquidity. So that might be a good part. I thought I added it to the share, but I'm not. But I'm just letting you know, Blox is good. So that's why I had it on my watch list. Anyways, going on. Fact, the administrator is U.S. Bank. What does that mean? The administrator is U.S. Bank Fund Services, LLC. The custodian is U.S. Bank National Association. These are top-tier providers. Your money is held with them, not Nicholas Wealth. All right, so that provides a sense of security for me. I like that. Let's look at the cost analysis. Total cost of ownership. Fiax is about 0.95. Giax is 0.93. Blox is 1.03, which is kind of high, right, compared to what I hold off of. Well, okay, it's high, but it's not much higher. But if I intend to hold it for such a long period of time, right, I want to just semi hold and buy and forget, set and forget. It is high, right? It's going to eventually take a drag on my my overall income, my overall total return. So there's something to think about. All right, my red flag, the income illusion part 1, taxes, right? Part 1, the earned portion is tax inefficient. Any part of the distribution you get is earned from the options will be taxed as short-term capital gains at your highest ordinary income rate, just like your salary. Again, we don't know until we get the ROC at the end of the year. I always have to put that is tax efficient until we get end of the year. That's why you always see me say tax efficient for almost cover call ETF, even if their notice says we will be giving out 90 and 95, 100% ROC. We won't know until the end of the year, so it's not guaranteed until you get that 1099. All right, the manufacturer portion is ROC. As you'll see, a huge portion of your recent distribution is ROC. I need you to understand this is not income at all. It is your own money being handed to you, which erodes the NAV. All right, the red flag, the income illusion part 2. Giax is 100% ROC as of September 26, 2025. That is also an estimate. Fiax is 59% ROC as recent distribution as in October 17, 2025. Again, that's estimated. And Blox is 41% ROC as of October 27, 2025. So again, that is also estimated. So official 19A notice or estimations, they are allowed to be completely off because they won't know until they're not going to be sure until you actually file your taxes and get your tax documents um, from your brokerage at the end of the year. Red flag, the black box, right? I've been talking about it and you're like, what the heck is it? Well, this is the black box, right? This means their secret sauce is hidden in a black box. As an investor, you have no idea how it works. Is an active strategy posing as a simple fund? I don't even know how it works. They keep saying it's a. That's what I could find, right? I couldn't find exactly. They want to keep it a secret on how they operate, which is also why I think it's kind of. It goes back to the FIA. Oh, I'm sorry, RIA. Um, it just didn't. It just seems like that whole meme where they're passing money around and it's just taking money off of you and giving it back to you and saying, "Yeah, we did well." Oh, I'm kind of iffy about this, right? Here's the risk you take. The model might be a curve fit. It might look brilliant based on past data, right? A back test could completely, could fail completely when the live market changes. You are betting on the model, not the market. And again, we don't have a back test yet to really test how well they're doing. So that's what I worry about. All right, key governance and conflict risk, right? Skin in the game. This is a trust metric for you. The SAI legally requires them to state how much of their own money the manager has invested. If they have $0 invested, they are selling you a product they won't eat themselves. You want to see that they share their risk. Right? Soft dollar conflict. RIA, which I just mentioned, Nicholas Wealth buys sell stocks for its private clients. Brokers thank the RIA with free services like premium research data. The risk is that the RIA might be using the client's commission to pay for research that benefits its own ETF business. So again, they don't really. I don't think they have a lot of skin in the game in my way. It just I have to give it more time. I don't really have a definite opinion on this fund and those Blox ETF. So this was my due diligence, and it's just you kind of get it from my point of view right now. I'm not really feeling it so far. Just have it on the watch list to really let it ride out the turbulence in a way. Give it another 4, 5, 6 months and see how it really performs. Right, operational risk is low, right? They do have a good operational management. This means the Nicholas Wealth only picks a stock and options. A separate multi-billion-dollar specialist company. The trust handles all the critical plumbing, the hard labor, the manual labor, holding your cash, custody, calculating the NAV, administration, and the handling. Compliance. This separates their idea from the structure. Holding your money, which is a best practice and very safe. Their investment, the way their investment strategy is I think it's extremely high. This is for me, I feel like this is a fact-based conclusion from my due diligence, right? Your investment proposition is dominated by a trifecta of high risk. One is the black box, which I don't even know what it is. Two is the key person risk. I mean, it's all dependent on Nicholas Nicholas Wealth and his image, his person. And then 3 is the strategy risk. The fund or structurally designed to underperform dramatically in bull markets. This is a combination of black box model risk, high fees, tax efficiency, and severe performance caps. Place your investment strategy in the highest category. And then this is my verdict. You need to see this is not a simple safe income piggy bank. This is a complicated machine. You are trading all your chance to get big wins. Bull market for a small payment right now. The payment you get is a taxed at your highest rate, like a job, and the funds company admit it's giving you your own money back, ROC, and calling it a yield, right? My verdict, these are high risk, expensive, tax unfriendly tools, not a foundation for building wealth at the moment. I don't know as of right now. I don't really see it doing too well, especially in a downturn market. I want to see the Blox ETF is near its inception price, so I want to see it go back up. I want to see how well they perform. They reached like a high of like almost $30, so they went from $20 to $30, and now they're back at around their $21-$20. So I want to see them kind of go back up around a 23-24 range and see how well they hold out there, because if they can hold out there, then their strategy might be working. Unless, it depends on the market. If they can hold and increase their stock price, then I'll probably get my feet wet into that fund. But as of right now, I'm not really a big fan of it. I'm kind of iffy. Let me know if you feel iffy about it too. Let me know if you own it. I really like to have Dalton, someone who actually have skin in the game and own the ETF. I'm the cover call guy. I hope you like this. This fund was kind of hard to really get a lot of information from it. That's another part I didn't like about it. It was very, very hard to get information. It was just, I had to use like 15-20 different sources and try to compile it into the most accurate information I could find, and make sure it was relevant and current. Let me know if you guys think there's some information here that's wrong, so I can correct it. This was my deep dive. I hope you guys enjoyed it. Catch you guys on the next. Thanks for watching.